Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. And I do need to stop for just a moment for several announcements. First of all, Bookmap is encouraging everyone to join Bookmap Discord. You do need a Bookmap subscription. There is a free subscription available if you do not already subscribe to Bookmap. And to get full access to Discord, you will need to verify your account in Discord to get full access to chat and the streams within Discord. And you can scan this QR code to help with that process. Next announcement, the Blue Jacket competition. This is something that Bookmap puts on every month. The prize for this month is a one-on-one session with me. So keep that in mind if you're interested in Blue Jacket competition. Again, the prize for this month is a one-on-one session with me. And then finally, the upcoming Pro Trader webinar series will be in Discord only. So typically in the past, I believe it has been streamed to Bookmap and YouTube, Bookmap Discord and YouTube. This time it will only be streamed in Discord. So another reason to join Discord, Bookmap Discord. The key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly in the large cap tech stocks like the Magnificent Seven stocks that I trade and follow, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when the traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned to the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as their directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord as well as the chat and YouTube for your questions and comments. please feel free to post. I'll do my best to answer your questions. And hello, Hector. Welcome. Glad you're here. And hello, Dan and Stephen. Welcome. Glad you're here as well. Here's my agenda for today, Friday, September 20th. First of all, I want to go over the news items, economic data, and events for today. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. And hello, oh boy, welcome. Glad you're here as well. All right, let's get started. News items. Big event for today, options expiration. This is a quarterly options expiration, usually much larger than the typical monthly options expirations. So the options that expire March, June, September, December, currently much larger than the other monthly options expirations. So let's take a look at that. So this is the options expiration chart for the S&P 500, Nasdaq 100, and Russell 2000. This chart is showing delta notional on the vertical axis and expiration dates on the horizontal axis. This is the September expiration. This is today. And note the orange bars are indicating delta notional positive delta notional. So that's market maker's position. Blue bars put delta notional. You can see the call delta notional much is much larger than the put delta notional. So this is a very call dominated options expiration, positive gamma options expiration. And as this delta and gamma expire today, and part of that has already happened with the SPX AM expiration, some of that call gamma that has been supporting the market will expire, could lead to more volatility next week. Not that there wasn't enough volatility this week. All right, so just remember now, very call-dominated options expiration coming up. One other thing to point out today, this is the absolute gamma chart for SPX. What this is showing is gamma notional. Again, orange bars are call gamma notional, positive gamma notional. Blue bars put gamma notional or negative gamma notional. And this is the 5,700 strike. More about that in a few minutes. So you can see the gamma notional market maker's position is very concentrated at 5,700 today. That is the absolute gamma strike. All right, so that is news items. Call-dominated expiration, gamma-weighted open interest concentrated at 5,700 in a positive gamma environment. That could lead to a pin at 5,700. All right, let's start with, let's move on now to positional analysis. I'm going to start with the S&P 500. This is the ES futures and Bookmap. Hector says, seems obscure, the September bar. Sorry, Hector, I'm not sure I understand your comment there. Was everyone able to see the, let me go back to the, was everyone able to see this very large bar on the left of this chart? I'm looking at this in YouTube. Hector, it seems very clear to me. All right. All right, so back to positional analysis. This is the S&P 500, ES Futures and Bookmap. And before I take a closer look at this chart, I do want to take a look at a higher time frame. I'm going to go to SPX, the underlying index. This is a 1 year, 1 day chart for SPX. Let's pick up recent price action. This was the July VIX expiration, Wednesday, July 17th, 3 days before the monthly options expiration, was a potential analog for this options expiration. Didn't play out due to the FOMC. All right, so correction 8.5, August 5th, low for SPX 51.19. That was after the Japan yen carry trade unwind over the weekend. Rally resumed, pull back to the 5,400 put wall at the time, and that was actually the SPY 540 put wall. And let's pick that up now with a 1 hour chart. Go to SPX 1 hour chart. There's that pullback just above the 5,400 put wall. That was the put wall at the time, and it is today as well. And that was actually also the SPY 540 put wall. Rally resumed, consolidation between around 5650. 5660, 5650. And then a big breakout. There was a wide range of trade on Wednesday, FOMC day, and then a big overnight gap. Most of the price action yesterday was in the overnight hours. Big gap up to the new high, 57.33. A little bit of consolidation today. A little bit of weakness due to the options expiration, most likely. Down below the lower daily expected move. All right, so let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. Based on the closing price for SPX from last Friday, those levels remain in place for the entire week. It looks like SPX is now up at close to the upper weekly expected move again. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. Note I do post those levels in Discord every day the evening before. So SPX did trade down below its lower daily expected move, and now it looks like it's up against the upper weekly expected move. The dark red lines on this chart are showing Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers, available on a variety of trading platforms. This is Thinkorswim, again, a 30-day, 1 hour chart. I'm going to point out the key daily levels. First of all, there's the put wall at 5,400. That's a strike with the largest net negative gamma. That can be expected to act as support. Note that level did move down from yesterday, from 5,500 yesterday, down to 5,400 today. And the next level up is the volatility trigger at 56.15. Then a Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, well above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. But Spotgamma considers price above the volatility trigger as a risk-on bullish green light environment. Note the volatility trigger did shift up about 20 points from yesterday. Next level up is 5,700. That's a strike that I mentioned before. That is the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. Looking for that to potentially act as a pin today. And that level did move up from yesterday. Then finally, the call wall remains at 5750. That's a strike with the largest net positive gamma that can be expected to act as resistance. All right, so the call wall and absolute gamma strike much more in play than the volatility trigger and put wall. All right, shifts in levels for SPX. Again, volatility trigger, absolute gamma strike shifted higher, put wall shifted lower. Not really in range today. And for SPY, the volatility trigger and put wall both shifted higher. So overall, I would say bullish shifts in levels for the S&P 500. All right, let's wrap up our view of SPX with a 1-minute chart. This is the big gap up on yesterday, Thursday. Gap up here to, can't really tell where the opening is, up to there. So again, most of the price action was overnight in the futures. SPX made a new intraday high, and now a little bit of consolidation. Again, a lot of delta and gamma notional expiring today. SPX did trade down below the lower daily expected move, and now it looks like it is struggling again with the upper weekly expected move, just above 5,700. And just a note, here's the volatility trigger down below at 56.15. So SPX in a firmly positive gamma environment. All right, let's go to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels as well as SPY levels. So that's the 5,700 level. Note there is an offset, a difference in price between ES and SPX. And today it is somewhere between 59 and 60 points. I'm using 59. So I'm showing SPX 5,700 at ES 57.59. Also, key SPY levels. Here's the SPY 468 volatility trigger. Oh, that's the 568. Sorry about that. Labeled that incorrectly. It is the SPY 568 volatility trigger. Then I also have key levels for ES. There's the lower daily expected move for ES. And then this is the upper weekly expected move for ES, acting as support before resistance before the cash open. So more about setups in a few minutes. I've just highlighted some key entry points for shorts in the morning before this reversal higher right around 11:30. All right, again, shifts in levels. I would say bullish for the S&P 500, SPX, and SPY. All right, let's move on to Nasdaq now. NQ futures and Bookmap. All right, let's take a quick look at the underlying index charts. Go to QQQ first. This is a 1-day, 1-minute chart. Key levels for QQQ, 480 is the absolute gamma strike. Below that, the zero gamma level at 479. Those are the two spot gamma levels in play for today. And for QQQ, all four key daily levels shifted higher compared to yesterday. So it looks like QQQ now is having trouble at the 482 level. That's just a round number level that acted as resistance before. Let's take a look at NDX. All right, NDX levels in play. Looks like the only spot gamma level in play for today is this 19,701 combo 3 level. All right, for NDX, there were some shifts in levels. Spotgamma did discuss this yesterday afternoon in the PM Founders Note. There is a fund, a Nasdaq covered call fund, and I've showed this before. The NDX roll, a very mechanical move in the hero signal for NDX that was yesterday. This covered call fund for Nasdaq rolled out of the 19,450 strike that had been the call wall absolute gamma strike for some time, and rolled into the 20,000 level, which is now the call wall absolute gamma strike for NDX. So the call wall absolute gamma strike for NDX moved higher to 20,000 now. So very bullish, shifts higher in levels for the NDX and QQQ. More on setups in a few minutes. Let's wrap up positional analysis. By taking a look at gamma notional, this is market maker's position on the gamma curve at the beginning of the day. For the S&P 500 and Nasdaq, note all these numbers are positive, very positive. So in a positive gamma environment, for an index, spot gamma assumes that traders are short calls, short calls, long puts. Market makers are long calls. Since the positive gamma, they have to trade against price to hedge their delta exposure. These numbers did shift higher pretty significantly from yesterday, all in a very positive gamma environment due to the big move yesterday. And note, with the gamma expiration on today, these numbers should shift lower on Monday, opening up the way to a little bit more volatility, perhaps early next week. All right, so that's my positional analysis, my thesis for the day. First of all, looking for low volatility due to the high gamma notional, and then really two theses, primary and alternate. First of all, primary, just bullish based on the shifts in levels higher for the S&P 500 and Nasdaq. And then alternate thesis was looking for some consolidation, maybe some weakness due to the large expiration today, call-dominated options expiration. Typical behavior after a large call-dominated expiration is, again, a little bit of weakness, consolidation. All right, let's move on to execution now. All right, oh boy asks about the gamma levels and SPX shown in the start. Were there real time at the moment shown at open at close of yesterday? So the answer to your question is at the close of yesterday. So other than Bookmap, all the information that I've shown so far is based on data from yesterday. That is, Spotgamma takes open interest data and applies their algorithms to that data to come up with the levels, the gamma levels, and the levels that I show on my chart. So that That is static data that's updated once a day at the close of the day. Open interest data comes out sometime during the night. And again, Spotgamma takes those levels, applies their algorithms to come up with the levels, the gamma notional, delta notional, shown on the charts. All right, so let's now move on to real time execution. And I'm going to start with the S&P 500. And as always, I'm going to start by taking a look at what options traders are doing today. This is the hero signal. So again, we're moving on from positional analysis to real-time execution. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The first is the white line, that's the price for SPX, and the purple line is the hero signal, HIRO, hedging impact real-time options. A falling hero signal indicates traders are taking negative delta positions. They are buying puts and or selling calls. And a rising hero signal indicates traders are taking positive delta options positions. They are buying calls and or selling puts. And there's another signal that we can take a look at for the S&P 500. That is the equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So that's the equity signal. Again, the white line is price for SPX. All right, let's go to full screen here. And both of these signals really provided good signals for the S&P 500. And now what I'm going to do, I'm going to shift to puts and calls, show puts and calls separately. I'm going to have to jump to avoid the auto zoom, jump back. Very similar. Typically the index signal is a little bit more noisy than the equity signal. All right, let's zoom in on this just a little bit. I want to look at the short setup this morning. So we're looking at the index signal right now, and this call peak pattern is something that Spotgamma has identified several weeks ago is a very reliable short setup, a very reliable bearish setup. You can see in the first 6-7 minutes of trade, less than 10 minutes, traders were taking positive delta positions, and it looks like right around 9:38, something like that, traders start selling calls. That's shown by the falling orange line. Also buying puts. That's shown by the falling blue line. When traders sell calls and buy puts, market makers take the opposite side of those trades, and they hedge their delta exposure by selling ES futures. All right, let's go to Bookmap. Actually, let's just go to the equity signal as well. Zoom in on this. Very similar, except this call peak occurred a couple of minutes earlier. Spotgamma calls this the Matterhorn pattern. So starting right around 9:37, 9:38, traders start selling calls, buying puts. So confirmation from both hero signals that price was moving lower. Let's go to Bookmap now. And I'm looking at, here's the cash open right here. 9:30 a.m. Eastern Time. SPX already moving lower. before the cash open, ES, already moving lower, found resistance at the upper weekly expected move, the dashed purple line, right around 9 a.m. The volume dots in Bookmap are showing buy minus sell. You can see some aggressive buyers at the open. And just a couple of 5, 6, 7 minutes after the cash open, buyers are exhausted. ES finds resistance at VWAP, and aggressive sellers start to come in, and price moves lower. So if you're trading pre-market, first entry point at this reversal at the upper weekly expected move. That's the upper weekly expected move for ES. Next entry point for short, right around this cluster of levels here. 5,700, 5702 combo 2 level, and then the 568 volatility trigger just above that. And then finally the third entry point. Oops. Right at 5,700, just below VWAP, as traders continue to take negative delta options positions. All right, let's go back to Hero. And you can see right around 11:15, the sharp reversal in the Hero signal. Traders shift quickly from selling calls and buying puts to selling puts and buying calls. Orange line, blue line, again moving the same direction, this time up. Price reverses higher. And we're looking at the equity signal right now. Note this is starting to roll over right around 12:30 to 1 o'clock. Hero signal is starting to reverse lower. Now, traders are again selling calls and buying puts. Put buying starts a few minutes after the call selling, right at 1 o'clock. Let's check the index signal. So the call line flattened out for quite a while. Now it looks like it may be moving lower. And traders started buying puts right around 12:40. So right now, in both the index signal and the equity signal, traders are selling calls and buying puts. Let's go back to Bookmap, and you can see the sharp drop. As that options pressure continues. Now aggressive sellers coming in. You can see that with the magenta volume dots. Let's take a look at Nasdaq. All right, Hector says, if I understand correctly, would you agree September could be very bearish? Yes, that is I think September is typically one of the weakest months. That's just seasonality. So yeah, just based on seasonality, September can be weak. All right, I'm not sure. Consider the rest of your, I'm not sure I understand the rest of your question. Considering high call expiration, VIX seems uprising, and JP Morgan caller at the end of this month. Surprised VT moved higher. Well, after the big move yesterday, I'm not surprised the volatility trigger moved higher. And note yesterday, with the big move higher, VIX did not drop that much. So we can take a look. And the JP Morgan collar that expires at the end of the month, That is there are JP Morgan funds that use a form of collar. They buy a put spread. They finance that by selling calls. For this month, the big quarterly expiration that expires at the end of the month, that JP Morgan short call is at 57.50, lining up with the current call wall at 57.50. All right, so again, Hector, given the big move up yesterday, I'm not surprised in the shifts in levels and the addition of call gamma and delta notional. All right, let's move on to Nasdaq. So this is the NQ futures and Bookmap. And let's take a look at signals for the Nasdaq now. I'm going to close full screen. Just like the S&P 500, there's an index signal. And you can see this is more of that roll for funds. That is all based on NDX. Let's take a look at that. So now I'm looking at a combined signal of NDX and QQQ. That's the index signal. And I'm going to shift to NDX so we can see that all of this mechanical move higher, more of a roll going on, some fund rolling in NDX. So for the index signal, we're going to have to look at QQQ to eliminate that. All right, so we're going to not look at the index signal, the combined index signal for Nasdaq. We'll take a look at QQQ. And then we can also take a look at the MAG 7 signal. A little bit more clarity in the MAG 7 signal, so we'll stick with that. What this chart is showing is options trades and market maker hedging activity for a combined signal of all 7 stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. All right, let's go back to full screen. We'll leave calls and puts on. Zoom in a little bit. Here's that call peak pattern, somewhere between 9:35 and 9:40 a.m. Eastern Time. For the first few minutes, traders are buying calls and selling puts. That quickly shifts bearish. Traders start selling calls and buying puts in the MAG 7 stocks, and price moves lower. And again, reversing higher right around 11:15. All right, let's go to Nasdaq, NQ futures and Bookmap. There's that reversal lower. You can see all the aggressive sellers start to come in. Price breaks below the QQQ 483 level and also the NQ 20,050 level. A lot of magenta dots. Cumulative volume delta shown by the dark blue line that shifts to magenta, falling. Also sell stop orders, shown by the falling yellow line, help to fuel the move lower. Then as traders started taking positive delta positions, Nasdaq reversed higher, found support somewhere between QQQ 478 and 479. Aggressive buyers start to come in. Sellers are exhausted. Smaller volume dots. Aggressive buyers start to come in. Move price up above VWAP. Then the options traders start to shift from bullish to neutral to bearish. And now price is rolling over. All right, let's go back to Hero. Zoom out. Oops. Bullish, neutral, bearish. And hello, Floyd's Garage. Welcome. Glad you're here. Oh boy, you're welcome. Oh boy, ask, do you have any statistics of the pinning levels suggested by the gamma levels? I do not. Spotgamma may. I don't know, but I do not. And we'll keep an eye on that. All right, so again, the Nasdaq now rolling over. So good short setup in this morning, confirmed by the hero signal and a good long. Now looking weak again. Let's see, did I show this for SPX? Good way to play this potential pin is an Iron Condor 0 DTE, Iron Condor centered. Here I centered it right around 5,700. This is, for those of you who may not be familiar, this is a profit and loss diagram. The purple line is showing the current profit and loss, and then the blue line showing the profit loss at the end of the day today. So far today, this is good for about a profit of $100. All right, so I would certainly close it at this point. All right, so the good way to play that again. All right, let's take a look at some stocks. First stock I want to take a look at is AMD. All right, note for AMD, 152.50 is the hedge wall. And I just drew this white line in Bookmap here. That level acted as support, looks like almost to the tick. All right, let's see what options traders are doing in AMD. I'm going to have to zoom in. It looks like some large put sellers coming in toward the end of the in the afternoon. So looking at the morning session, this short setup, call peak, traders almost immediately start selling calls, buying puts. Price moves lower. AMD finds support right at the 152.50 hedge wall. Hedge wall, similar to a volatility trigger, those levels can very often act as support and resistance. What this is a series of large block orders, large institution selling puts in AMD as AMD bounced off that hedge wall at 152.50. And now the call line has flattened out. And other than these large block orders, the put line has also been flat. Let's go back to Bookmap. And by the way, in stocks, volume dots are a little bit distorted today. Often on the monthly options expirations, the opening print and especially the closing print for some stocks, very large, and the volume dots in Bookmap are drawn relative. So the other volume dots look pretty small compared to the opening print and the closing print. All right, so again, there's that 152.50 level, acted as support, good target for the move lower in the morning. Now, AMD consolidating as the put sellers and the calls and puts have flattened out. They've taken the foot off the gas. All right, let's take a look at Amazon. Again, very large opening print. V-shaped recovery in Amazon. And for Amazon, 190 is the call wall key gamma strike. Let's take a look, see what options traders are doing. Go to Amazon. More institutional trades today. So we'll have to zoom in to obscure that. $9.38 call peak, in line with the call peaks in the index signals that we took a look at. Initially, traders are buying calls, start selling calls, price moves lower, and eventually they start buying puts as well. And price breaks below the 190 call wall key gamma strike. Looks like that happened just before 10 a.m. as price struggled with that level, then broke lower. More institutional orders. In this case, selling calls. And price reverses higher right around 11:15 as traders stop selling calls, start buying calls. All right, that's Amazon. Let's take a look at Microsoft. Zoom in on the morning. In the morning, traders are selling calls from the open. Start buying puts, blue line, orange line moving the same direction. Price moves lower. Go back to Bookmap. Go to Microsoft. Again, very large opening print. Pull back entries for a short. Then price reverses higher as traders start taking positive delta options positions. So right around 11:15, they stop selling calls. Start buying calls. Price moves higher. Call buyers take the foot off the gas. Price consolidates. All right, next stock, NVIDIA. Another call peak pattern here. NVIDIA definitely not the stock that it was earlier this year. Call peak pattern. Traders were buying calls for the first somewhere between 5, 6, 7 minutes. Quickly start selling calls. A few minutes later, start buying puts. Blue line, orange line moving the same direction. Price moves lower. And here in NVIDIA, the call buying, put selling did not last long. Flattens out. grinding slightly lower, then starting around 145, they start aggressively selling calls, then buying puts as well. All right, so that's NVIDIA. Let's go to Bookmap. Pull back entries for short. And then price versus lower right around the same time as everything else. As traders briefly take positive delta positions, then that shifts bearish again. Let's go back to Hero. All right, so no Spotgamma levels in play for NVIDIA. Let's take a look at Tesla. All right, for Tesla, 237 hedge wall in play, then the 235 put wall below that. Zoom in just a little bit. Very quick call peak pattern this morning, just a couple of minutes after the close show, when traders start selling calls, buying puts. Flow alert gets your attention, significant options activity, and price moves lower. Then reverses higher right around the same time as everything else, 11:15. Traders stop buying puts, start selling puts, stop selling calls, start buying calls. Price moves higher. Again, just like NVIDIA, that did not last very long. Bearish, bullish, now bearish again. Let's go take a look at Bookmap. Tesla. All right, there's that 237.50 hedge wall. Price did breach that a little bit, but around that level acted as support. Price went down to the liquidity at 236, reversed higher. So remember, traders taking negative delta options positions. Price moved higher, found resistance right around 240 and VWAP just below that. And then traders shifted to negative delta positions again. Now price moving lower, maybe down to that. Did I draw that line in the wrong place? I think I did. Let's go back to Hero. Yeah, it's 237.50. I drew that line in the wrong place. Sorry about that. 237.50. Let's go back. So price did move well below the hedge wall for Tesla. Should be up here, 237.50. Right around there. All right, so now Tesla back down at that level, at the 237.50 hedge wall. So for Tesla, the initial test of that level, it did not act as support. All right, does anyone have any stocks they want me to take a look at? All right, S&P back down. ES back down to the ES lower daily expected move. Let's check on SPX. Go to the 1 minute. So SPX just above its lower daily expected move. which is very close to the ES lower daily expected move. Let's check Nasdaq. All right, again, does anyone have any questions, any stocks they want me to take a look at? All right, let's go back to Hero. Let's see if we can get any clues about what's going on now. We'll start with the S&P 500 index signal. Let's shift to the total signal. So still moving lower. S&P 500 equity signal. Looks like it may be flattening out just a little bit. Mag 7 also flattening out a little bit. So traders that were taking negative delta options positions, looks like they have taken the foot off the gas in the equities signal, the Mag 7 and the S&P 500 equity signal, at least for the time being. As the S&P 500 is approaching the lower daily expected move for ES and SPX. All right, Hector wants to take a look at UNH. I don't have that in Bookmap. We can take a look in Hero here. Not a lot going on here. It looks like UNH did find support earlier today at the put wall at 570. Not a lot of options activity. This total delta notional pretty light at 5.5 million, but it is positive for the day. Traders taking positive delta options positions in UNH. Looks like it is moving higher from the slightly higher from the cash open. Maybe struggling around the 575 hedge wall and target up above the 580 call wall key gamma strike. All right, so again, put wall 570 support, price now just above the hedge wall at 575. Traders are taking positive delta options positions. All right, any more stocks? All right, so ES just above the lower daily expected move. Nasdaq much higher above its lower daily expected move. And note the QQQ 480 level, absolute gamma strike, is right in line with that NDX 19,701 combo 3 level. Those levels are right on top of each other. Let's check our iron condor in SPX. Assuming we didn't close it. So now profit just a little bit of $100. Hello, Neo. Welcome. Glad you're here. Neo asked, can we see Spotgamma trace for Nasdaq? Two things. First of all, I am not a beta tester for Trace, so I don't have access to it yet. Probably Spotgamma would not want me to show it anyway, so that's one reason that I'm not beta testing it. So it will be released next week on next Tuesday for Spotgamma Alpha subscribers. And also, Trace is only available for SPX right now. So sorry, Trace is not available for Nasdaq. It will be available for SPX. I'll start using it next Tuesday, and as soon as I feel comfortable that I understand what it is doing, I will be glad to show it. All right, you're welcome, Neo. All right, everyone, my time is up. I want to thank you very much for watching. It's been a great trading week. Everyone have a great weekend. Take some time off to recharge, refresh after this week, and I will see you on Monday. All right, everyone, thanks again. Bye.